Very good morning to our RANsquawk listeners and welcome to the European rundown for today, Wednesday the 11th of May. Just taking a quick look around the market, starting with the Asian session where we did see a slew of economic data out of China. We saw the CPI number come in slightly higher than expected, however both PPI and industrial production did miss estimates, so slightly mixed data there, and overall Asian equity markets did finish in positive territory. That has eased somewhat some of the concerns of any imminent tightening out of China, although the advisor Li Daoku does continue in Chinese press to state that further interest rate rises are likely to come this year. In terms of what we have seen so far here in Europe, generally higher equities, which has pushed Bund futures lower ahead of also a Shax auction from the Bundesbank we're looking out for shortly. In terms of equity markets, a bit of underperformance seen in the FTSE 100 today as large cap stocks such as BP and Royal Dutch Shell's A and B shares both trade ex-dividend today. In terms of what we have seen, still the market very jittery around the whole Eurozone sovereign situation, particularly that of Greece. However, the news flow so far today hasn't been too dissimilar from what we've already seen yesterday. We've had ECB's Mersch already come out on the wires and reiterate the stance of the ECB, saying that no restructuring is on the agenda or on the cards at the moment. And also ECB's Cohn, the latest member to join the ECB from the Belgian Central Bank, has been a little bit hawkish, saying there is a threat of second round effects, which has seen a slight rise in the euro against the dollar in the currencies. Looking forward though, much of the attention here in London turns to the release of the latest quarterly inflation report from the Bank of England. It is widely expected that he will be relatively dovish in his tone and will cut back on their growth estimates going forward. However, inflation could well see some near-term rises. He has already indicated, Mervyn King, that inflation could fluctuate in the range of 4 to 5% on the upside. However, in the long term, in the 2-year horizon, it is expected that King will reaffirm that rates or inflation rate will come back to target of 2%. And as such, that is the reason why they've kept interest rates on hold for the time being, and as most analysts expect, will continue to do so for at least the foreseeable future. That's pretty much it though from me here in London. We'll have another update for you at the cash equity close. Main figure this afternoon from the US will be trade balance, so we'll let you know how that went in our next updates. In the meantime, enjoy your trading day.